Thank you very much. Welcome back. We are in now for the very last minutes or part of our session. This is the last stretch we are into now. When we went for break, requested you to take a look at the information here. Although this was not complete because of the page. Follow instructions prepare the asset disposal account and to complete the note, the fixed asset note, as well as the cash flow statement. My advice to you would be, when you do your practice, your revision, as you have already started, you must not overlook the asset disposal, the note to the fixed asset note. You must not overlook that note, the fixed asset note and or the asset disposal. Sure, we're going to get a question on either the asset disposal account or the fixed asset note. It is very important that you understand it, you practice it. For sure it is there. One of the two would be there in the question paper on Tuesday. But I'm speaking under correction. If it is not there, please don't hold me to it. But I'll strongly suspect it will be there. Right, starting with the asset disposal, getting to our information. Equipment bought on the 30th of June 2007 for 40,000 rands was sold for cash on the 31st of December 2009 at carrying value. New equipment was purchased on the 1st of February for this amount, etc. Depreciation equipment is written off at 15% per annum on the cost price. Equipment bought on the 30th of June 2007 for 40,000 rands was sold for cash. So what we do, we transfer the cost of the equipment that was sold by debiting the asset disposal account with equipment. Debit this account with equipment, 40,000 rands. All right. And this was sold at carrying value. Cash at carrying value. We don't know, we must determine that, we must determine the carrying value, and that will also be your selling price. Depreciation on equipment is written off at 15% per annum on cost. Right, let's just stay with that one for a while. or the tangible asset note, right? To complete it, and we were given some information there, and all what we need to do is to fill in, or rather to complete the statement, fill in the missing information to complete the statement. And of course, under movements, what we have first would be additions. Additions at cost, you must remember that, always at cost, and disposals at carrying value. At carrying value. And you'll have depreciation. You'll have depreciation. Without any waste of time, we can easily quickly attend to the disposal carrying value. We've got that from our asset disposal account of 25,000 equipment. 25,000. Just let's put it in and put that in brackets so that we've disposed of that. Excellent. Right. This looks really easy, a question. Let's get our information. No additions to land and buildings. Any disposals? Let us look at land and buildings. If you look at the information given here, we have land and buildings at 2,764,000 from 4,139,000. Right, it means the new value, the new balance of your land and buildings is 2,764,000,000. A drop from 4,139,000, and that means we dispose of some buildings or some land, a piece of land, right? For how much? That would be the difference between the opening balance and the closing balance, or the carrying value, as at the beginning of the year and the carrying value as at the end of the year, right? Which should be 4139 minus 2764. That gives us the disposal of 1,375,000. That's the disposal here. All right. Obviously, we don't have depreciation here. We must calculate depreciation on equipment. Let's get our information. Equipment depreciation on equipment is written off at 15% per annum the cost price. Right. All right. What should happen is this. If you allow me, let me take a blank page and say our equipment is 300,000, right? And from it, we deduct the equipment that you've disposed of to leave us with 260,000, right, as the cost of the equipment remaining before I get to the 160, right? And we work out depreciation at what? At 15%, the rate of 15% on the remaining vehicles. Sorry, not vehicles, but equipment. So 15% of this is 26 plus half of 26, 13 should be 39,000. You can check. It should be 39,000. 26,000, oh, sorry. 260,000 times 0.15, that's 39,000. That is depreciation on the equipment that we are retaining, right? That's one, that is current. Two, we must also add depreciation, current depreciation on the asset, on the equipment that we have disposed of. Shall we do that? And how much is it? The current one is the third portion of it. If you go to the information, supplied information, new equipment was purchased on the 1st of February 2010 for 160. Yeah. 460, 2010. 1st February 2010. 1st February 2010 for 160. So we've got 160,000 times 15%. Now you must count from February to June 2010. It's February, March, April, May, June. It's 5 months times 5 divided by 12. It's 160,000 times 0.15 times 5 divided by 12. It's 10,000. 10,000 will be depreciation on the new equipment. So the total current year's depreciation is 52,000. 9 plus 3 is 12, carry 145, 52,000. 52,000. Right? And that is depreciation that will be shown here, 52,000. I hope I'm not leaving anything behind. Right? 52,000 will be your depreciation on all your equipment. And what will be your total cost, or the cost of your equipment? The new cost is 300,000 minus 40,000 plus 160,000, and that gives 420,000. That is the new cost. That is the new cost. And the depreciation is 135,000. Right, minus the 15,000 of the equipment that you've disposed of, right, plus the 52,000. That is 172,000. And you subtract that from 420,000, that gives us 248,000. We must just check it. Starting from the top, from the bottom is 248. Now, to verify, to check whether we're correct, we start from the top. We say 165,000 plus 160 minus 77,000. 248, that's correct. 77,000 be 25 plus that. Or can you say minus 25 minus 52? So it gives also 208,000. Who says we are there, we're correct. Okay. We're also required to prepare the cash flow, to complete the cash flow statement. We're supplied there with information. We don't have to worry about that. And here we've got fixed assets purchased, or purchases of fixed assets, or fixed assets purchased. And we can go to our two notes. To our note here, it should give us whether any addition. Looking at the note, we have the addition of 160 given. So that will be your fixed assets purchased, 160,000, and sale or sale of fixed assets. Again, this must come from your note. We have 1.3, it's 1375 million plus 25,000, and if you add the two together, give you 1,400,000. Right. And the total will be 1,240,000 if you add the two. So 1,400,000 minus 160. Right. Financing activities, I'll write just shares issued, right? So issues or proceeds from shares issued, right? Pardon me. Stuff has fallen here, I don't know. Good. Shares issued, then we must to information. In 2009, where our shares are 2,460,000. Sorry, no, not that's shareholders equity. Our shares, share capital at 1,750,000, and that went up to 1,900,000, right? So the difference there is 150,000, right? So 1900 minus 1750. I think I'm right to say this should give you 150. Sorry. Careful, I must also consider, check whether there was no share premium or whether there's no share premium. There is. 209 was 30,230, 2010 248, a difference of 18. So then we must add plus 18,000. Say plus 18,000. Then we must work out the difference. It's 1,090,000 minus 1.75 million to give us 150 plus 18,000, and this will then be 168,000. Nah, 18,000. It does not look clear. 18,000 plus. Let's add it. Must also consider your share premium as part of this, right? So, what next? Any loans? Yes, we've got a loan there. In 2009 it was 650, in 2010 280, right? So that says we've made a payment. Loan, repayment of loans, or loan repayment. From 650 650,000 minus 280,000, and what is the difference? 370. And that is a decrease in cash. So it's 370 minus 168 gives us 202,000 outflow of 202,000, right? Then if you add the three must give you a net change in cash and cash equivalents. 327 100 plus 1240 123 plus 202 123 is equals to 1587 300. pardon me, as your cash equivalents, as your net change in cash and cash equivalents. And if you subtract cash and cash equivalents at the beginning of the year of 1295, let me delete 10. Minus 1295, 1, 2, 3. That gives us 292,300 as your cash and cash equivalents at the end of the year. At the end of the year. I'm not so sure whether the calculator is fine. Let's go through the additions again. You can check me with my additions there. It's 327,100 plus 1240 plus, not plus, delete, minus 202. I added instead of subtracting 11. This is so 1365100 minus 1295 7,100. If that is the difference, 7,100. That will be cash and cash equivalents at the end of the year. I think that is in accordance with given information here. If they say, should be in accordance with information. Excuse me. No, we don't have anything. That is the story of the cash flow statement here with Okuhle Limited. All right, we're moving on.